The warning signs are getting harder to ignore. Canada's once unstoppable housing market is now showing the same cracks that appeared in the United States before the 2008 financial crash. From soaring household debt to falling sales volumes, price corrections, and desperate sellers, the parallels between Canada today and America in 2007 are striking and deeply concerning. Debt-fueled growth meets reality. For more than a decade, Canada's housing boom was driven by ultra-low interest rates, easy credit, and an almost unshakable belief that home prices would never fall. Canadians borrowed aggressively, using rising home values to refinance and spend more. The result? The country's household debt-to-income ratio exploded past 180%, one of the highest in the developed world, far higher than the US before its housing collapse in 2008. Now, with mortgage rates hovering near multi-decade highs, that debt burden has turned toxic. Many homeowners who took out cheap 5-year fixed mortgages during the pandemic are facing payment shocks of 30% to 50% as renewals hit at much higher rates. Mortgage defaults are still low for now, but the pressure is mounting, the same way it began in the US before the subprime crisis erupted. The soft landing that never lands. Politicians and bankers continue to promise a soft landing, but Canada's housing data tells a different story. Home sales are falling, new listings are rising, and prices are slipping quietly across major cities. Toronto and Vancouver, once symbols of endless growth, are seeing double-digit price declines in some neighborhoods. Condo investors, once flush with cheap financing, are now underwater as rental income fails to cover soaring mortgage payments. This is almost identical to what happened in the US in 2006 and 2007, when real estate speculation peaked, mortgage resets began, and the market started to seize up. Just as in the US, Canada's central bank kept rates too low for too long, fueling a borrowing binge that turned homes into speculative assets instead of places to live. The role of foreign money and speculation, another echo of the US crisis, lies in speculative demand. In the years leading up to 2008, American buyers flipped homes on leverage, confident that prices would keep rising. In Canada, the same phenomenon occurred, amplified by foreign capital inflows and investment-driven demand. Entire condo towers in Toronto and Vancouver were sold to investors before completion. That wave is now reversing. Many are trying to exit, but buyers have vanished. Builders are slowing new projects, citing weak demand and high financing costs. The construction slowdown threatens jobs, while households already stretched by mortgages are cutting back spending elsewhere, raising recession risks. The too-big-to-fail mentality, perhaps the most dangerous similarity to 2007, is complacency. Many Canadians still believe that a full-scale crash is impossible because the government won to let it happen. Americans believe the same about their banks and mortgages in 2007, but when confidence breaks, it breaks fast. Once sellers outnumber buyers and credit tightens, markets can fall far faster than policymakers can react. Why this time could be worse? Unlike the US in 2008, Canada has fewer tools to fight a housing collapse. Household debt is higher, and most borrowers are tied to short-term mortgage resets rather than 30-year fixed loans. That means higher rates hit faster and harder. Combined with weak productivity growth and rising unemployment, Canada's economic cushion is thin. If prices fall another 15% to 20%, many homeowners could slide into negative equity, trapping them in homes worth less than their mortgages. This would freeze mobility, hurt consumer spending, and could ripple into the broader economy. Conclusion: Canada's housing market doesn't need a carbon copy of 2008 to cause serious damage. It only needs a prolonged correction. The same ingredients that fueled America's housing meltdown are now baked into Canada's market: over-leverage, speculation, overconfidence, and denial. If history is any guide, this story rarely ends with a soft landing. It ends with a hard reset. And for Canada, that moment may already be on the horizon. If you found this report insightful, hit like, subscribe to Financial Vlog for no-fluff analysis, and turn on notifications so you never miss our next breakdown on global housing trends and economic risks.